Hello, today is Monday, May 25th, 2026. Here is your daily signal. According to Bloomberg, LNG tankers have begun transiting the Strait of Hormuz for the first time since the Iran war began, marking the reopening of critical shipping lanes after months of intense U.S.-Iran negotiations. The Strait of Hormuz, positioned between Iran and Oman, serves as a pivotal choke point, accounting for roughly 20% of global oil and LNG exports each year. Efforts to ease tensions have aimed at unclogging bottlenecks that have hindered energy trade since late 2023, previously causing significant energy price volatility and international military responses. On May 25, 2026, Reuters reported that the U.S. and Iran reached a provisional accord permitting gradual reopening of oil and LNG lanes, with Qatar Energy confirming heightened LNG exports to Europe through Financial Times, and OPEC noting that Brent crude stabilized at $82 a barrel after the announcement. In the near term, reopening Hormuz is expected to reduce oil and LNG price volatility, benefit regional energy exporters by lowering insurer risk premiums, and boost infrastructure investment and U.S.-Iran commercial cooperation, but risks of renewed political tension linger, potentially threatening fresh disruptions in future. Next, turning to the impact of the Iran war fallout and Federal Reserve responses on inflation expectations and consumer sentiment. According to the Wall Street Journal, U.S. consumer sentiment dropped by 8% this week as anxiety grew about long-term inflation, while Fortune reports even Trump supporters doubt his ability to quell rising prices. Since May 2026, long-term inflation expectations have become increasingly volatile amid the Iran war's global supply disruptions and surging energy prices, with the Federal Reserve led by Jerome Powell balancing rate decisions against persistent inflation risk. Reuters noted the Fed held rates steady on May 25, 2026, signaling caution due to ongoing conflict. Bloomberg revealed the University of Michigan's long-term inflation expectation index rose to 3.6%, up from 2.9% last month. Near-term consequences involve elevated prices, especially for fuel and transportation, while medium-term risks feature persistent inflation and potential stagflation if central bankers can't normalize policy. Global volatility and erosion of trust in monetary leadership may follow, with financial markets wary of capital flight and unsustainable fiscal dynamics. And finally, exploring how xAI's $15 billion per year compute leasing to Anthropic is reshaping the SpaceX IPO landscape. Bloomberg reports xAI's Colossus 1 and portions of Colossus 2 have begun leasing compute capacity to Anthropic, with TechCrunch confirming Anthropic's CEO Dario Amodei signed off and Reuters noting SpaceX IPO preparations are underway. This leasing arrangement is speculated to strategically bolster SpaceX's financials ahead of its potential late 2026 IPO, positioning xAI and Anthropic as major players in AI and cloud compute markets. The $15 biannual lease is expected to allow Anthropic to scale its AI research dramatically, with xAI generating substantial new revenue streams. SpaceX stands to gain from synergies in advanced compute infrastructure, accelerating innovation and attracting institutional investor interest. In the near term, both companies may see faster development cycles and expanded capabilities, while in the medium term, the IPO's success could hinge on this integrated compute footprint. Investors are watching closely to assess the impact on future dealmaking and technology leadership. Now, onto the markets. European markets were mixed, with Germany's EWG ending near 42.91 and slight losses observed in France and Italy. Spain faced a more notable drop, as EWP dipped by about 0.47%. Netherlands showed resilience with EWN barely moving, while Belgium climbed noticeably. China large-cap stocks slid again, led by FXI dropping about 1%, and Hong Kong's EWH and Malaysia's EWM ended slightly lower. Japan's EWJ added momentum, climbing nearly 4% month-over-month. Taiwan saw the biggest sector jump, with EWT up by over 12%, marking the strongest performer. Commodities trading mostly lower today, with gold, silver, and platinum all declining. GLD shed around 0.76% and platinum took a sharper fall. In contrast, copper climbed as CPR advanced nearly 3.5%, and carbon showed gains as KRBN rose 1.3%. U.S. oil weakened as USO fell by roughly 1.1%. Among favorites, AMD soared over 54% month-over-month, ARM spiked nearly 56%, and Intel surged more than 83%. Microsoft slipped slightly, while Nvidia lost nearly 2%. The S&P 500 edged higher, up about 0.4%, with semiconductors driving sector strength as stocks gained 24%. Healthcare and real estate both advanced, finance also ticked up, and agriculture lagged slightly. That's it for today. You can find more news and details on our website. Goodbye.